Welcome to the Property Investment Podcast. Now, we are in certainly dynamic and evolving economic conditions post-COVID. Our Australian residential investment sector, which is worth in aggregate value about $7 trillion, is one which is under the spotlight. It's been touted to potentially reduce in value as a result of depressed immigration for the near to medium term. Yet, interestingly, some sectors of the Australian residential market are firing like they've never fired before. Today, I speak with Ben Collier from the agency who focuses on Eastern Suburbs residential prestige property. I talked to him about his $460 million worth of residential prestige transactions in the last 12 months and what's creating the fire in the Eastern Suburbs prestige market. I hope you enjoy. The Property Investment Podcast is brought to you by Goose Capital. Goose Capital has, in conjunction with MP Funds Management, provided funding for over $1.3 billion of investment-grade real estate transactions and provided an investment return of 22% across the board, with the lowest being 9% and the highest being 42%. For more, go to www.goosecapitl.com. Ben, you started selling in 1993 in the eastern suburbs of Sydney, and that's many years ago. And fast forward to today, and you've had an incredible career. In the last 12 months, you've done around $400 million worth of prestige residential sales. And we're in the middle of a really interesting economic climate. So do you want to give a bit about the background of your career history and what you're seeing today?
Look, I started off as a sales assistant, and then my sales assistant role evolved over a period of time until I was basically doing it on my own. But I guess in that near 30 years, we've seen a lot of boom markets and a lot of markets being corrected for various reasons along the way. So I've certainly learned a lot through the last, almost 30 years.
And so with the current economic climate, I think one of the reasons that I really wanted to get you in here today and have a chat is because the post-COVID environment, the COVID environment and the post-COVID environment could be seen to be one where, given that the Australian residential market is very reliant on immigration and immigration has stopped, it would seem that the market would slow down a little. But your patch, and maybe you can give a bit of background as to what your patch is, seem to have actually increased in demand and outperformance.
So the area in which I work is primarily the Eastern Suburbs. If going into, look, the market started off quite well in that late January, early February period. I think we'll certainly, I guess we had Australia had the luxury of being forewarned of what might be ahead of us as far as COVID was concerned. And as we started to veer more into March, that started to be amplified in terms of the press abroad and locally. And as we veered probably mid to late March, we started to see almost an instant 5 to 10% correction, almost literally overnight. People started to go to ground. As we headed into Easter, I think people both emotionally adjusted and mentally adjusted to potentially what was considered the new norm, going into a lockdown, for example. And as we came out of Easter, people started to pop their heads back up again and have a look around and see what was available. And I think that could have been because they had more time on their hands and looking at properties online and reevaluating what was important to them and their family's needs, whether that be a lifestyle property or a complete sea or tree change, for example. Or just having the kids in a smaller house all of a sudden was the catalyst for mum and dad to start thinking about maybe we need something larger. So it was a very interesting period, combined with the fact that to compensate, the Reserve was slashing rates. There was short supply of stock. And then over a period of time, we started to see what would be called a recovery, where now we've well and truly exceeded that. So it's been an interesting thing to observe over a very, very short space of time. I mean, we've only ever had the ability to look at historical events, such as the most recent one and the most significant one for all of us would be the GFC. Now, the GFC hit us in September of 2008. And I would say at the top end of the market, the prestige end of the market, really didn't bottom out until late 2011, early 2012. So there's a fairly long period of time. Whereas we saw an instant correction overnight, albeit 5-10%, and then we've seen it rebound within a matter of months.
Thanks for tuning in to the first 5 minutes of the Property Investment Podcast. The Property Investment Podcast aims to bring together the best minds in the investment-grade real estate sector. For the full episode and access to the live follow-up webinar, go to the MP Report Premium subscription at www.my-property-report.com.